Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarte, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Hello, welcome to another episode of Real Estate Power Play. I am your host this week, Mark Monroe, and wherever you're listening to us, please like, share, and comment below. If there's anything that you want to hear from us, please put in the comments and we'll be more than happy. But this week, I'm excited. Somebody I've known for quite some time, Ken Close. I've known Kenny for what, 25, 27 years now, Ken?
Something like that.
We've done many deals together over the years.
A couple decades. We've been through a couple seasons.
That we have. You know, we've been around like God, remember that was a long time ago. When we had Matt Kirtland with us, we started doing some real estate deals. I think I see these young guys coming into the game now, getting into real estate, in the 20s, and it reminds me of us. That's when we started way back then. We were in our early 20s.
I carried on the legacy with TIG Realty, my brokerage firm that's been in place since 2008. And we got that TIG from Tangible Investment Group, which was our investment group that we put together back when we had Richard as the CPA, which I don't even know if he's still around anymore. That's how long that was.
Wow. And then we had that one deal that would have been a legacy. Imagine making that type of money in the 20s. What was the networking? So we didn't really have how the networking is done nowadays, the special social media, and had the meetups. You had some small meetups, but now they're all popping up all over the place. But what was that one? Was it BMI or what was it, BMI?
BMI, that was it. Yeah, that was the group to get together and meet everybody.
What was that called? BMI, but there's a abbreviation for it. But yes, that was like the real first networking back in the early 2000s.
Yeah, now it's taken on. I mean, they're all over the place. You can join so many different ones. I like to be specific, though. Those other companies, it's good to have diversity, but I love a group like, even your Facebook group is just it's really fun to be on because it's like-minded people working, That's why I'm excited to be here today, Mark.
Yeah, I appreciate it. So real quick, Kenny, why don't you give people a little bit of a background, and then we can talk about that one. We got to give that one story of that one deal that kind of totally changed directions on us. Go ahead and introduce yourself.
Yeah, so my name's Ken Close. Originally from New Jersey, but lived in West Palm Beach area for many years. Now I live in Orlando with my wife and 2 kids, and I've been in real estate for as long as I can remember. I know back in the late 1990s, I was laying on the couch and I decided I was going to get my real estate license and started doing that. Did timeshare and all kinds of different things. Got a little bit more serious and went into commercial real estate, took my CCIM courses and started to look into commercial real estate investments, managed over 1 million square foot for a developer and learned a lot there. Went back into regular real estate, did commercial and residential sales, and then went into specialized estate real estate. And that was with you, Mark, when you were around. And ended up opening a brokerage in 2008, doing short sales residential, and now I do flips for the past decade almost. I've been doing buy, repair, and sells. Of course, started a company, Homes by Option, back in 2006 because options were the thing that we were doing back then. No one was really doing them, and we fell in love with them and love creative things. I love creative things, out of the box thinking. So that's a little bit about me, man. Right now I'm in Orlando and excited to be speaking to everybody about this thing because I found this by mistake. But I believe in sharing the wealth and helping other people, and it's just been so good. I just want to tell everybody, man.
Yeah, we can't wait to hear about it. We'll talk a little bit about real estate, and then we'll kind of segue into your new venture. And that's great. But yeah, I forgot about that website, Homes by Option. I remember that one. That was great. And then you and I did our first creative deal. Bertha, what was that name? Bertha Jean.
Bertha Jean, baby. Bertha Jean was our first deal together, that sandwich lease option.
That was
Uh,
in 2003, I believe, somewhere
oh,
around there.
man. Talk about a win-win. That was phenomenal. We all made money on that one. That was fantastic.
Yep. And that helped her out. That was a great deal. And that's when the market took off back then before the big crash in 2008. So it's the same cycle. We see it now, kind of where we're at now. It's like, I don't know about you, but we've been in it for so long. We keep seeing the same cycles going up and down over the years. And, the same creative stuff. They call them different things. Like we call it back then, we call them sandwich. Nowadays, they call them wraps. But yeah. And why don't you tell everybody a little bit about our first deal that we had on the table with that land deal
Oh
from
yeah,
BMI.
that came through that mutual contact that we had, and that was several tens of acres right on the
It
backside
was,
of
it
International
was a
Drive.
hundred, yeah, it was 109 acres.
Yeah, 109 acres on the backside of International Drive in Orlando. That was owned by a private family, and they refused to sell to anybody else. It was the development property of the century, and the price was ridiculous. It was in the low millions for all of it. Um,
Yeah, we
and
were
that,
going to get it for like what was it, like $3-4 million we are going to get for it. But we had all the families, right? All the families, there's 7 families that had to sign on, and but
all
that
lined
one
up
guy,
to
that
go
that
except
one guy
one.
had to connect in. Yeah, he had the contact with that family.
You know, it's funny because you say that, and then we also had the high rise in downtown West Palm Beach with 115 units in it, and we had 113 of those signed up as well. It seems like one or two flies in the ointment that killed some major deals for us.
But that one we were locking up for like 3 or 5 million. I don't remember exactly. And you found a buyer that was willing to pay 20 or 25 million.
We
You
had
had a
it.
developer. Remember that?
Yeah. Oh yeah, we had it. If that guy didn't take a vacation, we would have been on a different call. We would have been calling from Maui on vacation.
Yeah. So what happened was the contact that was direct with the sellers, and we weren't. Think of like the daisy chain, if you will, nowadays. But yeah, so this guy had the contact with the sellers. They were willing to sell it, and they had what was it, 5 families already signed, but 2 families didn't. And this guy just disappeared for 2 weeks. He went on a cruise, and then when he came back, one of the other family members went and reached out to a realtor, and then
Tell,
everything blew up at that point. So
tell
that was one expensive cruise he went on.
Sure was. Cost us a bundle. If I was on the cruise, I might have pushed him overboard.
I know. I was like, how do you do like, oh, he could have taken how many cruises for that type of we were going to
I
make on that
know.
one.
It's all
Oh
good.
well.
That worked out. We're still breathing, living, and moving. So it's good stuff, man. Yeah, that was a
So
learning experience.
so let's jump into what you're doing now, and that's how we're starting to reconnect again. We've always stayed in touch over the years, talking about, and we just did a deal last year. We did a
We did
deal,
two.
two
Yeah,
deals together, right?
we did two deals together, and I'm always bird dogging, and we're always moving. So yeah, it's been good. And like I said, I'm still active in real estate. My brokerage is open. I'm selling real estate. Did over a couple million this year. And also, buying and selling homes. I got a duplex up in Ocala I'm doing right now, and looking at doing some. Boy, I tell you what, I saw a great deal in Arizona pop up on your website the other day. Subject to uh, pretty much seller financing for 100%. It was a really nice deal. So I'm still doing those things. But what I really wanted to get excited, what I'm really excited about to be on today is talking to everyone that comes on this podcast that doesn't know. So, sometimes we don't know what we don't know. And I didn't know. I mean, like I said, there's my background for you. I mean, I've got almost a doctorate in commercial real estate. I've been involved with real estate in just about every facet you can think of. I'd like to think of myself as pretty intelligent, savvy, and outside the box thinking, yet I didn't know about these things. You know what I mean? Um, so when I found out about them, I mean, basically what I'm doing today is I'm providing opportunities to give education to investors to how to avoid taxation, how to hedge against inflation, and how to protect yourself from market volatility, all while gaining money and keeping the money liquid. And it's exciting to me. So I'm doing educational things that provide different ways to work your capital. Continue doing what you're doing. just doing it from a different vehicle. I want to trade in your Volkswagen for a Porsche.
Whoops. Sorry about that. I like that. I like how you put that. You want to trade in your Volkswagen for a Porsche. So why don't you just dive into it and kind of explain? I know some people may know the product, but they call it different names. But why don't you? I know you and your wife has been into it, and she's been into it for what, 5 years now? A little bit longer?
Yeah, coming up on 7 right now. And,
Wow.
I had absolutely zero interest in everything when she got involved. And you mentioned people know about it. The problem is that, number one, a lot of these things are not taught the right way. Sometimes they're coming from their own angle. I just got through a medical issue and I noticed that, the surgeon, the best thing he told me to do was surgery. The radiologist, the best thing he said to do was radiology. And when these guys that come from these specific companies with products to push, they push only what they know. And, they're not bad people. It's just this is where they are in life. I didn't want to do that. Like I said, I kind of walked into this thing as an investor. And I show up. My wife's involved with insurance. My dad did insurance. The last thing I wanted to do was have anything to do with insurance. And yeah, seriously. And then, started talking about these things, living benefits. And I'm like, what are these living benefits things? It sounds good. I like anything with a benefit, but what is it really? And I really started to think about that. And I'm going, oh my goodness gracious. Here I am. I'm a husband. I got 2 kids. The only thing I knew about life insurance particular was that, it was basically death insurance. I had to die to use it. So that's not too enticing. And, quite honestly, I was like, well, I'll be dead. So what do I care? A lot of my single friends say the same thing. I'll be dead. But what I didn't realize is that, with medical the way it is right now, Mark, chances are if I had a heart attack in this chair right now, you'd call 911, send them to my house. I'd go to the hospital and I'd live. But I wouldn't be able to go flip houses. I wouldn't be able to go do real estate. I'd be, in recovery. And what I found out, that my income would go down, my expenses would go up, and I've gotten really no remedy to that except for maybe some stocks, some gold, some cash stuck aside, which goes very quickly. You just went through a medical thing too, so you know what I'm talking about. It comes out of nowhere and absolutely wrecks you. You're lucky to get off the deck. Let's see if Tyson does, or maybe Jake Paul. Don't know this weekend. But
That's funny. We are just talking about that with so we'll see how that is. But yeah, you're right. We all go through, when we're younger, we don't think about these things, but now you get to an age and we're all going to get to this age and we're at this age. And, we're just talking, in the beginning of this podcast, how in the beginning we're what behind our years and learning and losing out on deals, but now we're experienced. We've been around the block. We've seen everything, every type of situation in real estate. We've been in it pretty much, from the good
yeah,
to the bad. And now even on the health side of things.
you'd think so. And like I said, that's why I was kind of surprised that I didn't know about the next thing I'm talking about. So I'm like, okay, well, this is great because living benefits is basically insurance on my income. That's really what it is. And really, when you think about it, income is really your biggest asset because without it, you can't put any money anywhere. And if something happens to you and you don't have a stream of income, which I love your model, Mark, it's fantastic. But if something happens, you don't have a stream of income, you just have a bunch of assets. Well, you're going to have to fire sale them. You're not going to get your full value out of that. And they're going to be gone. They're not creating any more. So the income thing was really, really, really important for me to provide that, in the event of something happens to me and I don't die. If I die, they get all the money, no big deal. But if I don't die and something happens, okay, cancer, boom. I'm going to be out of commission for a while. I got to go through some surgeries. I'm not going to feel good. I'm going to be depressed, whatever. I got to work through it. Blah, blah. So this covers these kinds of things. So I got that, but then, that was great. And I was already happy with that. But then I went to the next meeting with these guys and they started talking about the Swiss Army knife, which that's what you're talking about. Most people have heard about infinite banking. So they use this term infinite banking and it sounds great. So I started thinking about it and looking at it. And I'm going, wow, what is this thing? They call it the Swiss Army knife. They call it the IRA on steroids too, or the Roth on steroids. So I'm looking at this. I'm going, okay, now I've done a SEP IRA investments. I borrowed on my life insurance before. It's never been easy for me. It's never been pretty. I don't know about you. Have you ever done that?
Not in my life insurance, I haven't, but
Yeah.
I know it's there.
Yeah, it's not. And I did a self-directed IRA, and I had intermediaries. I had to call them up and tell them what I'm going to do, and then they've got to clear the money. And
Yeah.
you know,
Yep, the
it,
custodians are yeah, the same
yeah,
thing. When we do our syndication deals, we're always constantly going investing, and then we also have investors invest in our deals, like that portfolio mobile home park. We had several, and I would say 80% of them, 90% of them use their IRAs to
yeah.
invest through.
So
Yep.
that wasn't for me. I didn't like that. I don't like the authority going, well, what are you going to do? Oh, by the way, you can't go to the property. You have to hire people. Like I'm a hands-on guy. So I really didn't like that so much. So I backed out of that, and then I put some money in some other things. Okay, but it's up and down, looking at the stock market and where's it going to go. And then when I took the money and put it out, it's gone. Now it's in that investment. So now I'm like, okay, well now it's in there. I've got to make it out of the money that I'm making on that. And it just didn't work good. I'm looking at this product and I'm going, okay, wait a minute. There's this thing called an indexed universal life product. And it's basically a Roth, which I do like Roth. But when you put money in a Roth, number one, you can only put a limit in there per year. And then once it's in there, you get penalized if you want to take it out. And you can't really get it to your 59 and a half. But this thing is an account that provides me the death benefit with living benefits that I just talked about for the term. And within that, I can grow that account tax deferred. And when I want to cash that, bless you, when I want to cash that out, it comes out tax free. When I started looking at this thing, Mark, I'm going, this is the absolute perfect tool for me in my flip business. I take money out. Normally, I had cash sitting in an account. I take the cash out. I buy the product. Maybe I take a hard money loan. Okay, I got a good hard money loan lender. I pay 1.5 or something like that. That's fantastic. I pay 8-9% or whatever it is. And I'm making those payments. Then I sell the thing off and I get rid of it. Right, I write off the difference. But what I realized is that I could take that money back myself by putting it in. So I took my capital and I systematically moved it over into this IUL account. And now it provides me my initial capital is now leveraged. I have a death benefit with those living benefits if something happens to me, way more than the original investment. I mean, in particular, I'm talking about my investment capital. I shot for $500,000. I got $1.3 million in coverage. So now that 500 grand is now $1.3 million overnight. I've done nothing. I got $1.3 million if something happens. It sits in there and it accrues. It's tied to an index. It's not in the market. And because it's in an account on the index, there's a contract with it. And the contract basically says you can never lose any money, but every time the index you're tied to gains, we're going to give you that gain. And I'm going, you got to be kidding me. This is fantastic. I can't lose any money. I can only gain money. I said, this is too good to be true. And they said, well, it seems like it, but honestly, we use that money and we are gambling basically that we're going to make more than we're giving you. And if we lose money, that's not your problem. So I love this thing. It's basically risk-free. I never lose $1 of my investment cash while it's in there. So it's virtually risk-free. I'm getting right now the S&P 500 is the index, and you can move the index around, but I tied it to the index of S&P. Right now, S&P is on a tear. I'm probably doing 9.5% in there. If I don't have a property besides my Ocala property. So the money that's in there that I'm looking to deploy on a new asset, Mark, it's still making 9%, even while I'm sitting here looking.
Yep. You're double dipping. Yeah, I know several investors use it, buying into multifamily, and they're getting at the time 6% return off the life insurance, and they're pulling it out and using the capital for the real estate asset.
I'm not even talking about that. I'm talking about if my money, the same amount of money that I put in there was sitting in my bank account right now, I'm looking for another property, looking. The market's kind of tight. I'm not finding any great deals. Guess what my money's doing in the bank account while I'm waiting? It's losing money. Inflation is taking money out of my bank account. Right now, my money is not anymore in the bank. It's in this IUL product. It's in that account, making 9 while I'm looking. So now I'm not even talking about the double dipping feature that you're talking about. The double dipping is more exciting Because what I realized is I take my money out, I'm borrowing from myself with no points, no questions, at about 5.6%, which is less than my hard money. And then I'm going out there, I'm doing the real estate deal. And let's say I make 20% on that, right? Now I borrowed the money at 5.5, 5.5, but I just told you I'm making 9. I'm making 4% on my own money while the money's out making 20. I really made 24% on that borrowed money that I took from my own account. It's incredible. And it goes back in there, growing tax deferred. I can't even tell you the differences of taxes. That's a whole nother thing. I really want to sit down. Anybody that hears this and goes, I want to know more, you'd be amazed how much taxes take away from income. And if you're scheduling yourself up, I got a bunch of rentals, all that rental income is taxable at the end. It adds to your Social Security. So if you're looking at retirement with rental properties, all that income raises your tax bracket, where now you're paying more taxes. Whereas this income that comes in off of this product, it doesn't add to your tax basis in retirement. It's completely tax free and it's unreportable. It's incredible.
So when the income comes back in it, does it have to go back into the insurance like a Roth? Like when you borrow, so when you do a Roth and you're investing into some of these real estate deals that we talked about earlier, the income has to go back into the Roth. How does it work with this type of a
All right, so let me
plan?
be clear about this. This is really, you don't even have to pay it back. But obviously, if you don't pay it back, the interest is going to continue to accrue against, like I said, 500 grand to 1.3. So the interest is going to accrue against the 1.3. If I die, then it would come off the 1.3 and my family would get the difference. Or if I got ill, it would come off the 1.3 and then I'd make an accelerated benefits claim and it would come out of there. So I don't need to even pay it off. But if I don't pay it off at my retirement time, if there's a balance still owed, I can't get the tax-free income. And I got into this. The reason why I get gold, the reason why I get stocks, the reason why I get real estate is so I can accrue money for my retirement income. So I don't want to lose that. So I planned, and I suggest everyone to plan to pay this back. I like short-term investments on these. In hard money lenders, perfect for you, because you can go and you can take this money, put it out. Now, to answer your question, yeah, this is the model that I suggest for people is take the money out, do what you're doing now. Just do it from yourself. Don't pay the points anymore. Don't pay the high interest rates, the hard monies. Shift your capital in there. Maybe you need to take it, but you're taking way less. You're paying 1.5 on way less because you're using your own money. Take the money when you sell the asset, when you get done with the investment and the money comes back. Yes, put your money back in. Now you're going to use some of the profit to pay off the interest. But again, you made 20 over there. You're only paying 5. So pay off the interest, zero the balance. And what I suggest, what my plan is take 10% of the profit above and beyond that and add it. As long as you don't put in too much, you won't trigger what they call a MEC, a modified endowment contract. And you can set yourself up that you can add more money. As you add that money, this is what I like. My motto, I'm going to get shirts made up. Pay yourself first. Because no one else is going to. This is my problem, Mark. I realized, with millions of dollars of real estate sold, I was living really good. I have everything I want and even most of the things that I want. My lifestyle. But here it is. I don't really have a plan for my retirement income except for the things that are normally thought about. This one is a tax-free retirement income. So when I do a deal, I pay back what I took out. I pay the interest that I was done. So I zeroed out and I take 10%. I do that. On the rest, maybe I'll go buy a stock. Maybe I'll go buy a car. Maybe I'll take my wife out. Maybe I'll go on vacation. But I take 10% and add that up because I'm building that pile. I can always use it for another investment if I want. It's always there.
I like it. So you specialize doing it in your fix and flips business, but I've seen also people using it in the multifamily syndication world as well.
Huge.
Yep. And
Yeah.
I didn't think about this, but another huge opportunity. I was just in Dallas this weekend at the note conference, like seller financing notes or just notes in general, mainly seller financing, and there's like tapes of this stuff and what these guys are doing, and they're finding a property out there and buying the note and turn around and selling the note, for 3-5%. So this is a great way avenue to use this type of product to be able to, like, if you want to, you're looking to buy notes. Like I was looking at this, I was talking to this one girl there, and she was like busy because she had a portfolio of notes of $5.4 million. And she already had a buyer already lined up, and she was going to make like 3 to 5% in that spread. So that's perfect for that.
It's absolute in and out deals. Again, this isn't a product for everyone. The reason why I was excited to get on your platform is because I'm dealing with people who are a little bit more savvy and are interested in those in and out deals. The syndication deals, I got a good friend of mine. He's doing 5-year plans, pulling money out of here, putting it in for 5 years and pulling it out. These syndication plans are perfect. What you just said is absolutely right. For those note deals, like I said, money lenders, I like to highlight this for short-term investments for people who know what they're doing. And you're going to grow and build an amazing income for you and your family by doing this because of the tax deferment or whatever. But yes, exactly. Hard money lenders, short-term, those syndication deals. I mean, listen, I wouldn't go buy gold. I don't want to do a long-term hold on this stuff. It's already in the account on an index. It's already making nice. So you don't want to pull it out and put it into something that's going to have the burn rate, cause you issues in and out.
I know. I like it. I like it a lot. So, the other thing where, there's a lot of people out there popping up that are coming into the business or coming into like my platform, where they have money and they want to invest in deals. I've seen it happen time and time and again. I would say probably, I would say about 15-18% of people that come in, it might be even a little bit more, but have capital, and they want to invest it in real estate deals. So think of this, if you're listening to us and you're one of these people, you might want, this is a great product where you can put it in and then turn around and lend it out, like these transactional lenders, and also known, sometimes they call them gator lenders out there. But those
Yep.
transactional lenders, they're constantly funding people on deals. I know you've done some transactional lending as well.
Exactly. And again, those deals sometimes they come a bunch and the money's deployed and it's not a problem. But when it's not, where is it? There's not many places you can make market like returns and have the liquidity without penalty. And this is one of them. And to be able to build that capital up, tax deferred tax, for a tax free income, that's a perfect scenario, Mark, for people who are looking to do that. Another thing is we haven't even talked about it, but building up wealth and being able to transfer it without probate and without taxation, because all of the money that's in that account will transfer to my beneficiaries tax free and without probate. Families go crazy when money gets involved, and you don't have that problem with this as well. So it's another thing that, again, remember in the beginning, I said he came out with this thing with a Swiss Army knife. And it really is. I mean,
You know,
so many underlying things.
besides for the probate, you also have it as asset protection. There's another loophole there. So I mean, not a loophole, but there's
In,
another avenue. So they can't, if you accidentally back up and you accidentally run over a child and they come after you, they can't go after your life insurance policies, correct?
in most states,
Most? Okay.
in most states, there's protection. In Florida, it's an unlimited amount. So your cash value inside that policy is protected against, legal, what do you call it when they,
Lawsuits.
well,
When they put
yeah,
when you get a judgment against you.
there you go. Thank you. That's exactly right. So, we live in Florida here. For us, it's absolutely perfect because it gives a level of protection. There's no required payments during again. When I do a couple of deals at a time, my burn rate goes so high if I have to pay those monthly payments on the interest. The interest only payments are pretty much. So if I'm doing 3 of those at a time, the burn rate becomes huge. Now that I've done this, I have no burn rate. I don't have to make a payment until I sell the product. Then I make the payment in a lump sum. That's a huge benefit for me. Anybody raising their hand right now knows exactly what I'm talking about. Going, my gosh, I want that. Because sometimes I got in some trouble. I was, cash starts to get low when something didn't sell the month you were thinking it was going to sell.
Well, we all know that, real estate investors, sometimes you can be cash poor because you got all your capital tied up in these assets. I mean,
Exactly. Yeah.
every investor's that way. That's why I get a lot of people coming to me, wanting to learn about seller financing. I get so many families that, that have a husband and wife. They reach out to me. They're like in the 30s and 40s, and they've already have 4 or 6 assets, rentals, and they want to do more, but they've already have all the capital tied into these assets, 30% down. So this is awesome. I like it, Kenny. Nice job. So I'm excited. I know we went up to Jacksonville, riding up, and we talked a little bit about it. So thanks for sharing that. How
Thanks for
can people
inviting me
reach
on.
you? How can everybody reach you?
You know what? The best thing to do is, because everybody's a little different. I think the best thing to do is to maybe give me a call and schedule a calendar, where we have some time, or you can give me a call. My number is 561-306-5275, or you can email me. It's Ken at investinyoufinancial.com. I created that specifically for this because it really is, again, it's the weirdest thing, but it really is an investment in you. I always thought that, insurance would be a bill. And that's another thing, Mark. A lot of people get scared about this. They go, oh, I don't want to pay for the insurance. And I'd rather, get term insurance and invest the difference. But this particular scenario is you get the insurance, which if you go to a money market or something like that, you're paying fees anyway, and you're just paying for the management of those fees, for them to manage. At least you get something for this, and it's huge because it's leveraged. But you're also invested at market-like returns. So that argument doesn't hold water with this particular thing. So anyway, Ken at investinyoufinancial.com. You can email me there. You can give me a call or text, and we can set up a Zoom call like this and see exactly where you are, what you're trying to do.
So, Kenny, is there any question that I did not ask you that I should have asked?
Mark, there's probably 100 questions. I guess, who is this insurance for? I mean, it's the IRS tax code that allows us investors to use this without penalty in a tax deferred situation and get this. And actually, they just passed the Consolidated Appropriations Act in 2021, which actually allows for more contributions. We got some clients that are putting, up to $1 million a year into these things because they just see that their capital's safe. They can never lose any principal. Where else can you say that? But they're still getting great returns, and they can have the liquidity to do whatever they want with it while it's there. So I think basically, hey, listen, insurance, the benefits I was talking about is for everybody. For individuals who are, who are looking to eliminate the future market volatility and stuff like that. For a family member, that's great. But I think that, the one question, who's this for? It's for, that's why I'm so excited. Thank you for inviting me on. Thank you guys. All three of you guys do a great job bringing relevant information to the people who are on, coming to this podcast. And I really think that the real estate investor, the hard money lender, the real estate agent who's active in the market, the syndicate investor, this needs to be, you need to look at this at least, nothing worse than
And the note people, I was around several
yeah,
people this past week in the note world. So,
yeah,
uh,
nothing worse than contempt prior to investigation. It's
so Kenny, one more time, what's your phone number again?
yeah, it's 561-306-5275. And again, my email is Ken at investinyoufinancial.com.
All right. Thank you so much for coming on, Ken. I appreciate it. It's always good catching up. We always catch up with each other. Been a great friend over the years, and
Thanks, Mark.
you've
You
seen
too.
my life. We've grown together. I remember, I remember when you got married. I was at your wedding, and then I remember your little one. How old is well, she's not so little. How old is she
No,
now?
dude, she's 18 this year.
Right. I remember that. I remember we're doing a deal when she was born, and you
Yeah,
didn't sleep very well, and you come into the office and you're a little grouchy that morning because you didn't
I
sleep
think
the
you
night
got to
before.
watch me wrestling with how to put a car seat in.
I remember those days.
Man, it's
Kenny,
good.
always a pleasure. So anybody, again, thank you guys for listening to another episode of Real Estate Power Play. Please follow us, like us, wherever you're on any of your favorite podcasts, YouTube, any of the social media platforms. Thank you guys so much for watching, and be safe.
Hey, listen, go get it. The market is going to be on fire. There's so much opportunity out there. Like I said in the beginning, don't stop what you're doing. Just trade in the Volkswagen for a Porsche because there's going to be so many opportunities that you can do this right now. It's a great economic time.
Everybody be well. Thank you again for another episode of Real Estate Power Play. Bye-bye.
Thank you all.